Hello friends and students. Today I am going to talk about journal entries. Journal entries are the foundation of accounting, providing a clear picture of a company's financial activities. So journal entries are the first step of your book record keeping, right? And this first step has to be 100% accurate. Because after journal entry, you are going to prepare ledgers, you are going to prepare trial balance, then the final accounts. So if you do any mistake at the time of journal entry, the report what you get in final accounts, your profit and loss account or your balance sheet will not be accurate. Hence, understanding journal entry, understanding the rules of debit and credit is very important. So what I'm going to cover in this video is majorly about the techniques used to identify debit and credit, and then I'm going to talk about 50 questions and answers which will make you understand how the journal entries are prepared. This video is good for people those are going to write exams or those are going to attempt competitive exams. Good for the students those are in 11th class. Now, before we move forward, if you have not subscribed to the channel or you are new to this channel, I would request you to subscribe this channel. Rules for journal entries. First, I'm going to explain you the traditional rules, which is generally called as the golden rules of debit and credit. And these rules generally you will find in your class books, right? After golden rules, I am going to talk about the modern rules, which I will be explaining in details in the upcoming slides. Now, under golden rules, the business transactions are accounted into three categories or three account types. One is the personal account, one is the real account, and one is the nominal account. Under personal account, the rule for debit and credit is the receiver is the debit and the giver is the credit. Let's take an example so you will understand more with clarity. Sale of goods to Mr. Ram. Here Ram is the receiver, right? Because Ram is going to receive the goods from the business. Hence Ram account will be debited, correct? The second example, purchase of goods from Mr. Sam. Sam is the giver of goods to the business, right? Hence Sam account will be credited. So if any transaction has a personal account, then to understand which account to be debited or credited, the rule of the receiver and giver has to be examined. Now coming to the real account, what comes in is debit and what goes out is credit. Let's take an example. Purchase of furniture. So purchase comes into the business, hence furniture account is debited. Similarly, sold plant and machinery to XYZ. Here plant and machinery goes out of the business, hence machinery account is credited. And this rule is applicable for real account. Coming to the last account, that is nominal account, right? All expenses and losses are debit and all income and gains are credit. Let's take the example. Salary paid, it is an expense, hence salary account is debited. On the reverse side, rental income, it is an income, hence rental income account is credited. So this is about the traditional rules. Next slide, I'll talk about the techniques used in the modern books, or you can see the modern way of analyzing whether it is debit or credit. Now we are clear on the golden rules, the debit and credit rules for personal account, real account, and nominal account. Now what I'm going to talk about is modern approach or financial statement approach. This approach is not written in any books. What I'm going to talk is more about my personal experience from the financial statement point of view. And this will help you to understand better how to prepare the journal entries. So business transactions are classified into different categories. The first category is assets, liability, capital fund, or you can say owner fund, expenses and losses, and income and gains. So whatever business transaction a company is doing today, it can be categorized under these five buckets. You will not have any more bucket. These are the five buckets under which the business transaction can be allocated, right? Now, the debit and credit rules for these five category are follows. Category for assets, if there is an increase of asset for the business, then you have to debit that. If there is a decrease in asset for the business, then it has to be credit. Similarly, if there is an increase of liability for the business, then it will be credit. If there is a decrease in liability, it will be debit. Similarly, in case of capital, if there is an increase in capital, it will be credit. And if there is a decrease, it will be debit. All expense and losses are debit. Any reduction in expense and losses are credit. All income and gains are credit. and all decrease in income and gains are debit. So you have to learn this format. This is very important. So whenever we'll try to solve a problem, the journal entry we have to connect is by this method: asset, liability, capital, expense, and income. Now let's try to understand what are assets. Because if I understand what are assets, then only I can understand whether there is an increase in assets or decrease in assets. If I understand what is increase and decrease, then only I will know what is debit and credit, right? So let's understand what is the meaning of assets for the business. So to simplify, I have defined into two categories. The first one is assets used in the business to generate revenue. Okay. So example like your fixed assets, factory building, plant and machinery, tools, furniture, all these are investment made by the company so that they use these assets and then generate revenue in future. Right. Second part is inventories or traded items. So when you buy raw material, the purpose is that to convert this raw material to finished goods and then sell to the customer. So these are also assets for the company, right? These are not fixed assets, but yes, these also are part of assets. Similarly, traded items, right? Where you don't manufacture, you just buy and sell to the customer. So these are one type of assets. And all these assets are real account, right? Now, the other type is very important. The other type is from whom business has to get money or benefits in future. Okay, so on any given day, if you have to receive any money from someone, then that person or that account has to be treated as asset. Okay, example, debtors. That means you have sold goods to the customer has not paid you, so he is the person from whom you are going to receive money, right? So it is an asset. Prepaid expenses. What is prepaid expenses? You have paid advance to your supplier, correct? So what is happening in this case? You have paid advance. If tomorrow he is not doing the activity or not giving the goods, you have 100% right to bring back that money from him. Or any benefits you will get in future like good and services. Hence that is also an asset. Tax credit to the government. So you have tax input credit from the government, and that tax input credit either you can get by cash or you can utilize with your tax liability. Similarly, your bank account, right? So bank is a personal account, right? So you have your money with the bank, right? So he's holding on behalf of you, and any day if you want you can collect the money from the bank. So these are the people who are holding money on behalf of you or holding money to pay back to you. So these are also covered under the assets, and these are all personal account. Now, whenever there is an increase of these assets for the business, you have to make it debit. Whenever there is a decrease of these assets, you have to make it credit. Let's understand what is the meaning of liability and capital. So if you see liabilities, under liabilities you have two part. One is liability and one is the capital. So I'll talk about liability first. So what is liability? To whom business has to make payment or transfer benefit in future, right? What was asset? From whom the business has to receive money. Now the reverse case. In case of liability, to whom business has to make payment or transfer benefit in future. So what are the examples here? Your vendors, suppliers, provision for expenses, borrowings, loans, interest payable, right? These are all payable to those suppliers or payable to a personal account. These are all personal account, right? Now, when it comes to capital, these are generally whatever the business has to pay to the owner or whatever the business has to report towards the owner, right? So you have example like share capital, written earning, and drawings. And this is also related to personal account. Now, what is the rule here? Debit and credit rule. If there is an increase in liability for the business, then it is credit. If there is a decrease in liability, it is debit. Coming to the third category, expense and income, this is equal to nominal account. So to derive profit and loss, you have to prepare profit and loss account. And under that, there are two heading. One is expense and loss and another is income. All expense and losses, for example, like salary, freight, legal, professional fee, rates and taxes, okay? These are all nominal account. And any increase in the expenses for the business has to be debited. Any decrease has to be credited. Similarly, in case of income, you have examples like sales, rental income, commission received, incentive received. These are all also nominal account, and any increase in income is credit, any decrease in income is debit. So you have to understand all these debit and credit rules. From upcoming slides, I'll be talking about examples connecting to this method, and you will see how easier it is to prepare the journal entries. Now let's practice few questions on journal entries. What I have done is I have made 5 categories. Initial categories will be simple journal entries, and then towards the end you will have complex journal entries. So let's start with example A. Ramesh has started business in the month of April, and below are the transactions for April. Pass necessary journal entries. And what I'm going to do is for all journal entries, I'll be following the modern technique. Okay. You also try, or you can pause the video and try to answer the questions, and then you can match whether you are correct or not. Let's start with the first transaction. Ramesh started business with cash 1 lakh. So here if you see there are two accounts, right? One is cash, one is Ramesh. Cash is an asset. So if Ramesh is bringing cash to the business, the cash balance will increase, or you can say the asset will increase for the business. Hence cash will be debited. And Ramesh will be credited because Ramesh is a capital and capital is increasing for the business, right? So what is the entry going we are going to post now? Cash account debited to Ramesh 1 lakh. Second transaction, Ramesh paid into bank 20,000 rupees. So he has given cash to 1 lakh, and at the same time he is also giving 20,000 rupees into the bank account. So here bank account is a separate asset, right? So bank account will be debited 20,000 to capital 20,000. Coming to the next transaction, bought goods for cash 50,000. Okay. So what is happening here? There are two assets. One is goods, right? Inventory is goods, and another one is cash. What is happening? Your inventory is increasing. At the same time, cash is decreasing, right? But both are on assets. So what was our rule? Our rule was that increase in asset has to be debited, decrease in asset has to be credited. So what is increasing here? Inventory, or you can say purchase account. So purchase account or inventory is debited to 50,000 to cash 50,000 because cash is reducing. Okay, any reduction in asset has to be credited. Next transaction, drew cash from bank for office purpose 10,000. So here also you have two account. One is cash, one is bank, and both are assets for the business, right? But what is happening? One asset is increasing, that is cash, because you're withdrawing money, hence cash is increasing. At the same time, another asset, that is bank balance is reducing, right? So what will happen? Whatever assets is increasing, that is your cash account, that will be debited to bank because that asset is reducing by 10,000 rupees. So to bank 10,000. Next transaction, sold goods to Krishna 15,000 rupees. So what is happening here? Similarly, we have two items here. One is Krishna's account, another is sold, right? That is sales. So Krishna is an asset for the company, right? Because person from whom the business has to get money. So Krishna is taking goods and he has to pay to company, right? Or to the business. So Krishna account will be debited 15,000 to sales because income, all income has to be credited. Next transaction, bought good from Sam 22,500. So when you're buying goods from Sam, okay, Sam is a liability, right? Because you have to pay money to him, and this liability is increasing, right? And at the same time, goods, which is an asset, is increasing for the company. So what is the entry here? Increase in an asset will be debited, that is purchase or inventory account debited 22,500 to Sam 22,500 because liability is increasing and that will be paid to Sam in future. Next item, Krishna returned goods 2,000. So in point number 5, Krishna took goods of 15,000. Now he's returning back 2,000. So if he's returning back, am I going to collect 15,000 from Krishna going forward? The answer is no. So what I need to do, I have to reverse Krishna account by 2,000 rupees, right? Or you can say decrease in an asset of 2,000 rupees. So what entry you're going to post? Sales debit 2,000 to Krishna account 2,000. Next item. Received cash from Krishna 12,500 and allowed discount of rupees 500. So after 15,000, we posted another entry where 2,000 rupees of items he has returned. Net, the business would get 13,000. But what is happening now here? Krishna is paying you only 12,500 and business is allowing the remaining amount as discount. Okay. So here if you see, it is a composite entry. It's not only one single account debit or credit, right? So what is happening here? Cash received is 12,500. So asset increased by 12,500. Cash is an asset for the business. Cash discount 500 because it is an expense or loss for the business. Hence it is debited to Krishna account 13,000. right? Why Krishna account 13,000, not 12,500? Because Krishna is not going to pay you anything more. If after giving this discount of 500, he has paid the remaining amount 12,500. So there is nothing extra money you are going to get from Krishna, right? So his account has to be closed or nullified. In that case, you can't show any amount still receivable from Krishna. Hence, Krishna account of 13,000 has to be credited here. Your assets reduced by 13,000 rupees because you are not going to collect anything more. Next transaction, paid cash to Sam 21,500 and discount received 1,000. So this is the reverse example of the previous one. So what entry you're going to post? Sam was your liability, right? Now you are making payment. So what will happen? Liability will reduce, correct? So liability reduction means that account has to be debited. So Sam account 22,500 to cash. Cash is an asset and it is reducing because it is going out from the company or you are reducing the asset 21,500 to discount received 1,000. So discount received is the income for the business, right? Otherwise you would have paid 22,500 to Sam. He has given a discount. So it's an income for the business. Hence credited. Next transaction, cash sales of the month 80,000, right? So cash sales, cash is an asset. So 80,000 the business has received. So cash has gone up, asset is increasing. At the same time, sales is income. Any income is always credit. So what entry are going to post? Cash account debited to sales account, 18,000, 80,000. Point number 11, paid rent 5,000. This is simple. Rent is expense, expense is debited, and to cash because when you're making payment, cash is an asset, it is reducing, hence any asset reduction is credit. Next one is paid salary 10,000. Similar to the above entry, salary account debited to cash account. Now let's start with the second example. Sam has started business in the month of April and below are the transaction for April. Past necessary journal entries. So the first transaction is Sam started business with cash rupees 6 lakhs, furniture 2 lakhs and building 10 lakhs. So what's happening here? Sam is not only getting cash, Sam is getting furniture and building for the business as well, right? So furniture, building, cash, all are assets for the business. And what is happening by this transaction? The assets for the company is increasing, right? At the same time, the company will have a liability which is called as capital, and the entry what you're going to post will be cash account debited 6 lakhs, furniture 2 lakhs, building 10 lakhs, and SAM account or you can say capital account is 18 lakhs. Next transaction, depreciation on building 20,000 rupees. So depreciation is mostly amortization, wear and tear of the building, and that is an expense. Any expense has to be debit. Building value is coming down because of this depreciation. Building is an asset. Any reduction of asset is always credit. So the entry to be posted is depreciation account debited 20,000 to building 20,000. Sold goods to Mr. Avinash 1 lakh and provided a cash discount of 1,000. So what is happening here? You are selling the goods to Avinash. Okay. So Avinash is the customer. Avinash is an asset for the company and that value is increasing by 1 lakh, right? Because you have to receive money from Avinash, right? Now you are giving a cash discount of 1 lakh. So are you going to get 1 lakh from Avinash or it is 99,000? The answer is 99,000 because you are giving a discount of 1,000, right? So what entry you are going to post now? Avinash account debited 99,000. Cash discount is a loss. All loss has to be debited. So 1,000. To sales 1 lakh, right? Sales is revenue or you can say income. Hence it is credited by 1 lakh rupees. Coming to the next transaction. Sold goods on credit to Deepa 1.5 lakhs. So Deepa is a customer here and the business has to receive money from Deepa. So it is an asset. And this asset is increasing by 1.5 lakh rupees because the business has sold goods to Deepa. And sales here is revenue or you can say income. So it is to be credited. So what is the entry now? Deepa account debited 1.5 lakhs to sales 1.5 lakhs. Next transaction. Warehouse rent paid for the month of April 10,000. Sam also paid 2 months rent advance to the landlord 20,000 rupees. So here you have two transactions. One is the expense rent and second is the advance payment to the landlord. So any advance payment to the landlord, the benefit will come in future, right? And if you see my definition of asset, I have explained very clearly that any money paid to anyone for future benefits, then that has to be treated as an asset. right? And that is increasing by 20,000 rupees. So what is the accounting entry here? Rent account debited 10,000, rent prepaid expenses debited 20,000 to cash 30,000. Next transaction. Deepa failed to make the payment and Sam decided to write off the amount received from Deepa, right? So what was the amount received from Deepa? That is 1.5 lakh rupees. Now what has happened? She failed to make the payment to the business. Now business want to write off. Now, if I have to write off, then Deepa's account, which is an asset, I have to reduce it, right? Because it can't be an asset because I'm not going to get money from Deepa. So to reduce it or to reduce the asset, I have to credit. And what has to be debited? The loss, because you're not getting the money. So the entry will be bad debt account debited 1.5 lakhs to Deepa account 1.5 lakhs. Next transaction, salary paid 10,000, bonus to employees accrued for the month is 5,000. That means salary is paid by cash, bonus only accrued, not released, not paid, right? What is the entry here? Salary account debited because all expense has to be debited 10,000. Bonus for employees, this is also a expense 5,000 debit to cash 10,000 because asset reduced, cash is an asset reduced, hence credit to cash 10,000 and to bonus payable 5,000. Why? Because this is a liability and there is an increase of liability by 5,000 because the business has to pay in future to the employees. So 5,000 is credited here. Next transaction, sold furniture for rupees 15,000 and the value of the furniture was 20,000 on the date of sale. Okay, so the asset value was 20,000 and you sold it for 15,000, right? So what is happening? Your asset is reducing by 20,000 because when you're selling, that asset is going out of the business and asset is reducing. Reducing means it has to be credited. What is coming in? It is only the money which is coming in. And how much it is coming? Only 15,000. So cash balance will go up by 15,000. Asset going up has to be debited. What is happening here? There is a loss because you had an asset of 20,000. You're selling it at 15,000. The difference of that is loss. Loss has to be debited. Hence, what is the entry now? Cash account debited 15,000, loss on sale of asset is 5,000, to furniture 20,000. Next transaction, paid commission to dealers, very clear, expenses, commission is expenses. So expense account debited, commission expense 20,000 to cash because asset is reducing, you are making the payment, cash is an asset, hence credit 20,000 rupees. Took loan from bank 1 lakh. So when you're taking loan from the bank, what is happening? Your bank balance will go up. So that is an asset. Asset increasing is debited. And loan from bank is a liability because you have to pay the bank in future. So it's a liability, right? So loan from bank will be credited with 1 lakh rupees. Now let's move to the next category of examples where you will find little bit complex journal entries now. Journalize the following transactions. The first transaction is received an order for goods for rupees 1,20,000 from Mr. Ram and Sons. So here, if you see the question, whether the transaction has really happened, the answer is no. So what has happened? Only you have received a order. Order is not a business transaction, right? The sale has not happened. So do you require to post a journal entry? The answer is no. No journal entry to be posted as only order received and there is no actual sales. Okay, so you have to be careful while reading the question. Next transaction. Received order for goods from Mr. Sekhar and Co. of rupees 5 lakh along with a check of rupees 1,80,000 as an advance. Right? So what is happening here? You have received a order of rupees 5 lakh, no accounting entry because there is no sales. Right? It is just an order. But there is a transaction happening that is check received for rupees 1,80,000 as an advance. That has to be recorded, right? So what is the entry here? The asset is increasing, bank balance will go up. At the same time, you have to credit Mr. Sekhar and Co as 1,80,000 rupees, right? Because you have received the advance. So when you're receiving the advance, you have to give benefit in future, right? So that is a liability. You're creating liability to Sekhar. Next transaction. Placed order for goods with Mr. Gupta and Sons of rupees 2,50,000. Paid them 1 lakh by check in advance. So here is the reverse case where you are buying goods. You have placed an order of 2.5 lakhs. Order has no journal entry. That is very clear. But you have paid advance of 1 lakh. So the entry is similar to point number 2, but in the reverse manner. So Gupta and Sons 1 lakh is debited, right? Because the money is with them. Either you get money from him in future or you get goods in future. So it is an asset, increase in asset of 1 lakh. And there is a decrease of asset, that is your bank balance has decreased, hence to bank 1 lakh rupees. Next transaction, Gupta and Sons supplied goods of 2.5 lakhs, right? Because you order for 2.5 lakhs, you are now receiving the goods for 2.5 lakhs. So what is the entry we're going to post now? Purchase account debited because inventory will go up. Inventory is an asset. Any increase in asset is a debited. So purchase account debited 2.5 lakhs to Gupta and Sons 2.5 lakhs because it is a liability for you. You have to pay Gupta 2.5 lakh rupees, right? Hence you created a liability of 2.5 lakh rupees. Next transaction. Paid a check for 60% of the balance amount due to Gupta and Sons on the account. So what was the history? There was an advance payment of 1 lakh. Order placed was 2.5 lakhs. Then good received is 2.5 lakhs. So what is the net amount you have to pay? 2.5 minus 1 lakh. So 1.5 lakh rupees you have to pay to Gupta and Sons. And what this transaction talks about, out of that 1.5 lakhs, 60% of that you are releasing the payment now. So what is the accounting entry? Gupta and Sons account debited 90,000, correct? To bank 90,000 because your liability was 2.5 lakhs. 1 lakh already you have paid. Net liability is 1.5 lakhs. That liability you are reducing and because you're paying 90,000 rupees. So reduction of liability is debited here, Gupta and Sons. To bank because it is an asset which is reducing by 90,000 rupees, right? Next transaction. Goods for rupees 20,000 and furniture of book value 10,000 destroyed by fire. So this is very clear. Goods is an asset, furniture is an asset. If they are destroyed means the value is reducing. If it is reducing means what? You have to credit. What you will debit? It is a loss. So simple entry. So loss on fire 30,000 to purchase or you can say inventory 20,000 to fixed assets 10,000. Next, goods costing 50,000 were damaged in transit. A claim was made on railway authorities for the same. This is quite tricky. You have to be very clear here. So goods costing 50,000 were damaged in transit. So if it is only a direct damage, what you will do? It is loss, right? So loss account, loss on or inventory write-off debited to inventory, right? But what is happening here? You are placing a claim on the railway authorities. That means you are going to receive this money. Hence, you should not recognize the loss now. So what is the entry you are going to post? Insurance receivable account debited 50,000 to purchase or goods in transit account 50,000. Anyway, your inventory has to be adjusted because that is lost. It is damaged. So inventory value has to be reduced. Your inventory is an asset, hence reduction is a credit. So to purchase to goods in transit. But what I'm debiting? Insurance receivable. Any money receivable from anyone, right? Definition of asset. So that asset I'm creating by 50,000 rupees. Next transaction. Received from salesman rupees 60,000 for goods sold by him after deducting his traveling expenses of 4,000 rupees. So here sometimes people get confused that who is this salesman? So salesman is part of the business. Don't treat him as a customer. Okay. So what is the accounting entry you are having here? So net amount what you're receiving from salesman is 56,000 rupees. Why? Because he collected 60,000 and 4,000 he deducted because there was some traveling expenses which he recovered from the business or he took it from the business. So net amount what you're receiving is 56,000, right? Your asset increased by 56,000. At the same time, there is an expense for the business also, that is your traveling expenses of 4,000, right? Then two sales 60,000, that is revenue income, hence credited. Next transaction, sold goods to Bises costing 40,000 at a profit of 25% and allowing him 10% trade discount. One thing you have to keep in mind that trade discount entry is never posted, right? Because this is the discount giving on the listing price or selling price. Now, what is the cost? 40,000. What is the profit to be loaded? 25%, which is equal to 10,000 rupees. Hence, the selling price is 50,000. Now, what the business is doing is giving a trade discount of 10%, right? So, what is the selling price? Net selling price? It is 50,000 minus 5,000, which is 10% of 50,000. Net is 45,000. So, the selling price is 45,000 rupees. Now, what is the accounting entry? Business account debited, customer account is always debit, asset increased by 45,000 there. To sales income is credit, 45,000 rupees. Next transaction. Received a check of rupees 40,000 from the railway authorities in full settlement of the claim for damage in transit. So what was the damage? The damage was for 50,000. Now what has happened? You are getting only 40,000. And what is the net loss? It is 10,000 rupees. So what entry you are going to post now? Loss is always debited. So loss in transit 10,000 rupees. Bank, because asset increased by 40,000 rupees because the railway authorities they paid to the company or to the business. Bank account debited 40,000. To insurance receivable, right? Because when there was a damage and we claimed to the insurance company, to the railway authorities, that time we posted entry as insurance receivable, right? And here it is credited because you are not going to get more amount from the railway authorities. So to insurance receivable, 50,000 rupees. Example D. Past journal entries for the following adjustment on 31st March 2025. So here I have taken few examples which you will pass entries while you are preparing the final accounts. First one, interest due but not received 10,000. That means the interest is due but you have not received from the bank or from the customer, right? So what entry you are going to post here? Interest receivable because it is an asset. Okay. What is the definition of asset? I explained in the beginning. Any amount received from someone, right? So interest receivable 10,000 to interest income because it is an income for the business, hence credit 10,000 rupees. Next transaction, salary due to staff 50,000. It is not paid, it is due, right? So salaries expense account debited 50,000 to salary outstanding payable. Salary expense is debited because it is an expense. Salary outstanding is a liability because liability is created because you have to pay in future to the employees, right? Third, out of rent paid this year, rupees 5,000 is for next year. Very clear case of prepaid, right? Prepaid is always an asset. Increase in asset is debited, and bank and an asset has reduced because you have paid 5,000. Hence, to bank credit 5,000. Next transaction. Provide 10% depreciation on furniture costing 1 lakh. So what is depreciation? Wear and tear. It is a loss. So it will be debited. Furniture value will come down by 10% because there is depreciation on furniture. So what is the entry here? Depreciation account debited 10,000 to furniture 10,000. Next transaction. Received commission of rupees 20,000 by check, half of which is advance. That means total 20,000 is not your income, right? Half you received is as advance. So what is the entry? Anyway, your bank balance has gone up by 20,000, right? So asset has increased by 20,000. So you will debit bank account by 10,000 rupees. Now, this 10,000, you have two component. One is commission received. So it is credited, right? All income will be credited 10,000. At the same time, you have received advance from the customer, that is 10,000. That is also credited because you have to give benefit in future or you have to pay back this money, right? If you are not earning that commission, you have to pay back the commission. Amount received from Gopal customer 20,000. However, the check got bounced as dishonored by bank. So what has happened when you have received the check? What entry you would have posted? Bank account debited to Gopal because you're receiving the money from the customer. Now what has happened? The check has bounced. So what will happen? Again, you have to increase the asset, right? Because Gopal account is credited when you receive the check. So you're going to post an entry, Gopal account debited 20,000 to bank 20,000. Even you are not paying anyone, to bank is credited here because at the time of receiving the check, you have increased the bank balance. Okay. Now because the amount is not getting credited, you are reversing the entry here. Next transaction. Bonus for employees considered was 10% of salary. However, management want to increase the bonus percentage to 12%. Bonus already accounted in books is 10,000. That means 10% is equal to 10,000. So 12% means it is 12,000. So what you will do now? A incremental entry for 2,000 rupees has to be posted. And what is the entry? Bonus expenses rupees 2,000 debited. As an expense, it is debited to salary outstanding, right? Because it is a liability you have to pay to the employee. So 2,000 you have to credit. Next question. Customer which was retained off 4 years back has made the payment in this year 25,000 rupees. So 4 years back you have treated bad debt, you have posted entry bad debt to customer account. Today customer account is not showing any receivable. But what has happened now? Suddenly you have received 25,000 rupees from the customer. So what do you need to do now? Bank balance has increased, asset has increased, so 25,000 rupees debited to other income 25,000 rupees because there is no customer account, so the money what you're receiving will be treated as other income, and income is always credit. We'll come to the last category. Example number E. Journalize the following transactions in the book of Bhushan agencies. Right. The first is sold goods to ABC Limited 1 lakh. GST applicable is 18% on selling price. Right. So normal entry ABC Limited customer account debited. Right. Asset increase 1 lakh 18,000. hence debited. Two sales, income is credit 1 lakh, and there is a GST liability, right? So GST liability is 18,000 because you have to pay to the government, hence it is a liability. And 18,000 is derived on 1 lakh. 18% of 1 lakh is 18,000, right? So total amount received from ABC is 1 lakh 18,000. Sometimes students do mistake that ABC Limited is 1 lakh and they struggle to post this 18,000 rupees on the other side. So the total amount to be received from ABC is 1 lakh 18, 1 lakh toward the goods, 18,000 toward the GST. Second transaction, purchase goods from XYZ Limited 2 lakh. GST payable is 5% on goods purchased. GST credit can be availed. What is the meaning of credit can be availed? That means the amount of GST what you pay to the supplier, you can adjust that amount while you make payment of GST liability. You can net it off and the balance you can pay to the government. Now, what entry you're going to post here? Purchase inventory asset is increasing, so debit 2 lakh rupees. GST input credit is an asset, right? That means this is the advance you are paying to the government. So debit 10,000 rupees, 5% on 2 lakh, to XYZ Limited 2 lakh 10,000 rupees, right? Next transaction. ABC Limited made payment before due date and received a cash discount of rupees 5,000 from Bhushan Agencies. Now the ABC Limited in question number 1 has taken goods and he has to pay 1 lakh 18,000, right? But what has happened now? He's making the payment and 5,000 rupees discount is given. Now this 5,000 rupees is a loss for Bhushan Agencies, hence cash discount is debited. Bank what you are receiving is 1 lakh 13,000 rupees and to ABC Limited is 1 lakh 18,000 rupees, right? Next transaction. GST liability paid to the government after adjusting all tax credit. Now what is the GST you collected from Bhushan? Sorry, from the customer ABC, it is 18,000. Now, how much tax credit you have taken while making payment to XYZ Limited? That is 10,000. What is the net amount you have to pay to the government now? It is 18,000 minus 10,000, that is 8,000 rupees. So, what is the accounting entry you're going to post now? GST liability debited because you're taking out the liability, right? You're discharging the liability. So any reduction of liability has to be debited. So debited 18,000 to GST input credit, this asset you are utilizing, so you are reducing the asset. So credited 10,000 to bank, your asset is reducing because you're making payment to the government 8,000 rupees. Next transaction, received professional fee invoice of rupees 1 lakh from Ram, liability created after deduction of 10% TDS. So professional fee expenses has to be debited, that is 1 lakh rupees. To TDS payable 10,000 because you are deducting TDS of 10% and this TDS will be paid to the government. And what is the net amount you're going to pay Ram? It is 90,000 rupees, right? So TDS payable is a liability, increase in liability is credited to Ram is a liability, increase in liability is credited to Mr. Ram. Salary paid to employees 9 lakh after deduction of employee contribution to PF 40,000 and TDS on salary 80,000. So net payment to the employees 9 lakh, but there are two deductions 40,000 and 80,000. Let's see what is the entry here. So salary account debited. How 10 lakh 20,000 has come? Let's look into the credit first, then you will understand why it is 10 lakh 20,000 rupees. So what is the deduction? PF liability, right? So PF liability is 40,000 and it is a liability which will be paid to the PF trust or to RPF. So 40,000 rupees. To TDS payable which will be paid to the government 80,000 rupees. To bank what is actually paid to the employee. But what is the total cost, salary cost for the company? It is 9 lakh plus 80,000 plus 40,000, that is 10 lakh 20,000 rupees. Hence, salary will be debited with 10 lakh 20,000 rupees. How you are making the payment has no relation. What is the total cost incurred by the business has to be debited as expenses. Next transaction. A notice from Income Tax Department received for rupees 4 lakh. Management want to create a provision for it. So very clear. The entry is tax expenses. Expense is going up. Debit 4 lakh to provision for tax. It is a liability, right? So we are creating a provision for tax of 4 lakh. Now coming to the next transaction. One employee who was having a travel advance of rupees 10,000 was absconding, right? And travel advance has to be written off. So what entry you have to post now? Advance write-off account 10,000 to travel advance account 10,000 rupees, right? Next transaction. Provision created for obsolescence material 25,000 rupees. So inventory is obsolete now. You can't sell in the market. You have to write it off. So inventory write-off expense debited. Inventory is an asset. You have to reduce it. Reduction of asset is credit to inventory 25,000 rupees. Now coming to the last transaction. Restatement of loan of euro 10,000. The unrealized forex loss derived is 30,000. So how we are going to post this unrealized forex loss now? Debit forex unrealized loss account debited because it is an expense, and you have to increase the liability amount, right? Because you are restating the loan. So when you're increasing the liability, loan account will be credited for 30,000. So that's it from my side. Hope these examples will help you to understand the complex journal entries. Share with your friends. And if you have not subscribed to the channel, request you to subscribe this channel so that you get more updates in future. Thank you.